So it's just like insurance. Your operating agreement is an insurance. The next question, do you purchase your properties in your name or in your business name? What we do, most lenders will not allow you to purchase properties in the name of an LLC. So what we do is a double close. We would purchase the property in our names and then transfer it immediately into an LLC. Now, one of the things to keep in mind that some states, like Maryland 2 years ago, changed the law where if you transfer a property from your name into an LLC, you will have to pay the transfer taxes. And so that's why you want to do a double close on the same day that you're purchasing the property, you're getting it transferred. But there's also other strategies where even if you still have it in your name, you can do equity stripping where you strip out the equity that's in the property. Because after all, what are we after? We don't want people to come and take the equity that's in the property. So you can put a friendly lien on the property. You can, strip the equity by having an LLC put a lien on the property or do a loan package. So there are several strategies. I'll encourage you to call me for us to talk more about how to properly protect your equity. Because even when you have a property in an LLC, if there's equity in the property, the person may not sue you, but they can sue the LLC. So you still have a problem. I mean, the LLC protects you from personal liability, which is the top down from the bottom up creditor, but it doesn't protect you from the top down creditor, meaning that the top down creditor can sue the LLC and have access to the equity that's in the property. So there are several strategies that we utilize for that. Okay, I have a question here. Can a self-directed IRA be used to fund Pittsburgh rental property along with ongoing expenses? Absolutely yes. The answer is yes to that. However, I do want to raise a caution. We need to do an analysis on what type of return you're going to be getting on that property. If it's such that you're going to have a cash flowing property, but with depreciation, it becomes a tax loss. I usually advise my clients on not using a self-directed IRA for a rental if it's going to throw off tax losses because it's just loss. Tax losses that otherwise would have reduced your taxable income from other sources, because you have it in a self-directed IRA, you will not be able to use those losses or offset those losses. So my short answer to that is yes. My long answer is it's on a case-by-case basis.
A bulk of our clients use self-directed IRAs to invest with us, and a lot of investors who've lost a lot of money in the market or who have their money somewhere right now making 3 to 4%, if that's generous, tend to put their money with us, and it provides a long-term stable place for their retirement funds to sit that grows at a great rate. So we actually find that very often. I'm not sure if how much some of the people know about the self-directed IRAs. One of the things to note is that the cash flow that's produced from the property goes directly to your self-directed IRA. So it does not affect your day-to-day positive cash flow, and that's fine. I just wanted to point that out. Not everyone knows that. My family utilizes self-directed IRAs. It's awesome. My son is 18 months old, and I should have done one already. I was lax, but starting this year, he's going to be doing a self-directed IRA himself. He's able to get paid for advertising, and he's able to lend that money to get a return. That's not necessarily in real estate, but in other areas. So, yes, you are able to do that, and we do deal a lot with that.
All right. The other thing, we are going to send out a survey. I think we're going to continue doing those webinars. I'm definitely going to have a webinar just on self-directed IRAs, because another thing that I want to cover is the whole concept of UBTI, unrelated business taxable income. And that's something that a lot of investors are taking a hit on because they don't understand how unrelated business taxable income is impacted by their self-directed IRA investment. We still have a lot of questions to cover, so I will move on. But if you're interested in talking about UBTI, you can contact us directly, or just look out for the next webinar where we're going to be talking about self-directed IRAs. The next question is, are you also involved in larger commercial property deals, or can you assist if I choose at a later date to sell my portfolio and 1031 exchange into a larger commercial apartment type building? The answer is yes. We will assist you in finding a qualified intermediary and also a qualified escrow account. And yes, currently I'm looking at moving into commercial deals. I actually just formed a mastermind group last month where we are starting to look for commercial property. And the goal is to see if we can purchase one before the year runs out.
And the answer is yes on our end. We do have that capability. Once again, it's all up to the demand of the investor. You come to us, and that is your interest, and that is what we will search for. And they are here in Pittsburgh. They are rare, comparatively speaking, to 1 through 8 units, but they are out there.
All right, the next question, if you invest using your self-directed IRA, if you form an LLC that is owned by the IRA, is the income taxable on your personal tax return? No. However, like I said, if the IRA has unrelated business taxable income, meaning that you used any kind of debt to purchase the property, there will be income. There will be taxes on the portion of the income that's related to the debt finance. It does not go on your personal income tax return. You would have to file a 990T for that, and the tax rate for that is 35%. So, no, the income is not taxable on your personal tax return, but if you have unrelated business taxable income, you would have to file the Form 990T for that. You guys are asking great questions. Let's see here. Keep going. All right. Can you transfer your car from your name to your LLC and have your LLC make the monthly payments? I think I already answered that. The answer is yes, but it does not necessarily make those monthly payments deductible. It would still have to be based on the percentage of business use. So if you're making $300 payment every month and it's $3,600 for the year, you automatically don't get that $3,600 deduction. It's going to be based on what portion of the car is used for business. You use it for business 20% of the time, 30 or 50%. That's the percentage that you would get a deduction for. I see people ask a lot of that question. I want to transfer property into my LLC. It does not necessarily make it deductible. Can we purchase the Pittsburgh Steelers Stadium? Great question.
Great question. Great question. I'd love to be in on that, but I don't think the Rooneys are giving it up anytime soon. But you know what? If you move to Pittsburgh, a piece of you lies in that stadium. So come on, join us here and come move to Pittsburgh, and you'll be a part of the Steeler Nation if you're not already.
All right, so we're going to start winding down here. Somebody said they just joined the webinar late. Will there be a replay? There's definitely going to be a replay. It's being recorded. We are going to send out an email for you to be on the replay line. And I encourage you to please give us a call. Give us a call if you want to discuss either about taxes, entity structuring, or you want to talk about investing in Pittsburgh. Okay, so I'm going to just leave this contact information out here as we continue to take calls. I'm going to try to take a couple of more calls so we wind down in the next 6 minutes. What expenses can you claim when you visit your out-of-state property? Plane tickets, yes. What about when you go to check out a potential out-of-state property to buy? That's when you, okay, let's answer the first question. What is your out-of-state property expenses can you deduct? Definitely the cost of travel, meals, while you're under there, the mileage, if you get a rental car. if you go and visit other properties while you're there. So as long as it's an ordinary and necessary expense, you can then, even if you don't fly but you travel, the mileage and you use your regular car, the mileage from your home to the property and back is deductible. But you just want to make sure that you keep a mileage log or keep track of that mileage. So pretty much any expense that you incur in relation, even while you're out there and you need to meet with a realtor and you have to drive out to meet a realtor or go see a tenant. When I was out in North Carolina with one of my properties, I got there and I needed to change the locks. Well, I had to go meet with a locksmith. So those expenses I would have to deduct. Even though I was out there on vacation, but I realized while I was there I needed to change my locks. Automatically, my mileage became deductible because I had to visit the properties while I was there. Um,
That's beautiful.
Is there a warranty on these rehabbed homes? I think that's your question, TJ.
Yes, there is. We give a 1-year warranty on all the work we do, but we stand strongly behind our work at the same time. So if there's something that comes up with the work we've done after 2 or 3 years, we're going to stand behind our work. But we do give a guaranteed 1-year warranty behind all the work we perform. Like I said, we're here to build long-term, lasting relationships. My goal is that when I'm speaking to an investor and they're thinking about working with me, that I can give them your phone number and your name for them to call, for you to back me up and for you to support what I say. And I want your face, your picture, and your testimony on my website. And the only way that's going to happen is by me servicing you to the top degree. That's one of your protections in working with me is my name is everything in this business. The real estate world is very, very small. I've been to meetings in New York and I've talked to somebody that's known the same person that I know from Washington, D.C. I've been in California, and the same thing has happened. So my name is everything. So I have a very strong incentive to make sure I do what I say. First of all, it's the way to grow business. It's just what I live by. And my father and the rest of my company, I know a bear lives by the same thing. Second of all, if I don't do what I say, I could be out of this business really fast.
All right. Get into the last question, or almost the last question. I looked at the properties available. The positive cash flow does not take financing into account. Does your office help with financing?
We do not list financing on any of our deals because each investor is different in how they get financing. A lot of our deals are not in financeable condition unless you use hard money. We're not a big fan of hard money. I do not personally associate myself with any particular financer. I can give you several phone numbers. The way most of our investors work, the majority, is they purchase the properties and renovate the properties and pay our fee with their own capital, whether that be from a home equity line of credit, retirement funds, or cash they have in the bank, and then down the road they get it refinanced. Now, and the reason being is because when most of the homes that we're doing, when you buy them, they are in need of a lot of work, and banks will not, or it's very hard to find banks that will lend on that unless you're going to pay a lot of money to acquire that financing. So that's the most efficient and most cost-effective way to work. And so down the road you refinance. And I want to note that once you do have financing, your cash-on-cash return goes up. Even though your cash flow decreases, the amount of cash you have out of pocket decreases tremendously also. Therefore, when you work the numbers, normally on our deals, when you have about 70 to 75% financing on a deal, your cash-on-cash return is going to be up around the 30 to 60% range.
All right. What does TJ's property management consist of, especially for someone outside the Pittsburgh area?
The property management consist of everything that you need to manage the property from start to finish. First and foremost, I would like to make sure that it's clear that I personally am not the property management company. I do have my own. I'm a licensed property manager, Bench Aurora Property Management, but I've teamed up with another property management company named Mace Property Management. That's MACE Property Management. They're a family-owned and operated business like myself. I'm partnered with them. What I mean by that is they do all the day-to-day activities. I still screen all tenants, and I still take all maintenance calls. So I have a strong hand in your property. The property management includes, first and foremost, advertising the property. Secondly, showing the property. Thirdly, lining up, getting the tenant in the property, taking all phone calls from the tenant, collecting the rent, providing monthly reports and checks to the owners, and scheduling any maintenance that is necessary. That actually comes through me, and any lawn care that's necessary, any repair calls, any shoveling of snow. So basically everything. Our owners do not. None of our owners speak to the tenants unless they really want to on their own for whatever reason. So it's truly hands-off real estate investing.
Okay, I think those are the questions, and we're pretty much done for now. I'll encourage everybody to please visit our website, www.wealthbuildingcpa.com. And TJ, go ahead and give them your website and phone number.
Once again, my phone number is 412-498-2790. Once again, please write this down, 412-498-2790. My website is www.investinpittsburgh.net. Make sure you go to .net. Investinpittsburgh.net. That pretty much tells what we do. And my email address is T as in Tom, J as in Joseph, Bencho, like a bench you sit on with an O at the end, at Comcast.net. And I'm really looking forward to building a long-term relationship with you.
All right. Again, and my website is www.wealthbuildingcpa.com. And our phone number is 1-888-502-3767. And you can send us an email at info@wealthbuildingcpa.com. I'm sending you some information right now on our wealth building plan registration form, basically everything that's covered in that. If you're interested in becoming part of my wealth building plan, and we currently have almost 250 investors in that plan, please feel free to give me a call and we can talk about it. If there's no other, there's one last question, and I think that's it. How do you join my mastermind group? Please contact me offline and we can talk more about it. All right, guys, this has been a great meeting. I've really enjoyed having this webinar. We are going to send out a survey. Please answer the survey. Tell us if you enjoyed this. If there's more things you'd like us to cover on the webinar, we'll see how often we can do this webinar. TJ, do you have any closing comments?
Yes, just that. Just very excited about what we just experienced. Barry, you gave a lot of great information, and I just want to say that I'm blessed to have the relationship that we have, and I want to thank you very much for taking your time and doing this with me.
All right, thank you, and it's been an exciting opportunity to work with you. Like I said, I love investing in Pittsburgh, so it's only appropriate that we speak from the same vantage point. All right, everybody, have a great rest of the week, and I look forward to talking to you guys. Please give us a call for your initial phone consultation at 1-888-502-3767, or you can call TJ at 412-298. Did I say that right? 2790.
Yes, 412-498-2790.
All right, guys. Well, take care and have a great day.
Bye.